Good afternoon, everybody, and welcome to our weekly Broker Moves review. My name is Carl Capilingua. I'm the market analyst over here at Think Markets, and it is a pleasure to be with you as we delve into everything broker-related that happened during the week. So, ratings, upgrades, downgrades, price target changes, and more after we talk about the Think Markets difference, which is substantial $8 flat rate trades, your own holder identification number, unlimited phone support, and no hidden platform or subscription fees. And if you can sign up before Jan 31, only a couple of days, so get onto it right now. Your first 10 trades are on us. So as I said, get to the website, download the Think Trader app and get started. The agenda for today, as I said, we're going to check out all of the broker moves for the week and then have a look at a couple of stocks of interest. We'll kick off with the broker upgrade. So brokers typically will have a buy, hold or sell, and some in between and some outside of those recommendations, but generally what they think investors should do. And we're looking at how those ratings change during the week. So Morgan Stanley, for example, they upgraded the ASX, the company that runs the Australian Securities Exchange, from underweight to equal weight, and at the same time they increased the price target by some 7.4% from 67.90 to 72.90, and that's about a 1.5% difference between that target and the current share price to the good. Looking at some of the other ratings changes during the week, interesting to note a couple of travel stocks getting mentions. So we saw Credit Suisse raising their rating for corporate travel management group from neutral to outperform, and a big bump up in the target price by about 57%, and that's still showing about 32% upside. And down here we've also got Credit Suisse commenting on Webjet. They went from neutral to outperform there as well, and a 45.9% increase in their target, still allowing for about a 13% upside. Outside of that, Harvey Norman continues to feel the love from the brokers. They went from equal weight to overweight. At Morgan Stanley, reasonable jump up in the price target there, and still a bit of upside included. Other than that, I'll let you press pause at any stage during the recording. Feel free to do that and have a look to see if your stock is in that list. Let's keep this moving though. We'll have a look at the downgrades now, and some pretty consistent themes through these downgrades. Apart from Computershare, I'm going to say they are all mining and energy stocks, mainly mining stocks. So IGO, that's a nickel stock. They came out during the week. I'm just checking my notes here so I can give you some absolutely accurate information. They said that quarterly copper and nickel production at their Nova mine was down about 3.5% compared to the previous quarter. So their quarterly update, half-year profit is looking like it's going to be down about 45.9%, and revenues are down about 3% overall. Production, under pressure. So not a great update from them, and we saw as a result Credit Suisse go from outperform to neutral, but a small increase in their price target. But that price target is actually above where the company's shares are trading at the moment. Look at Resources from neutral to underperform, heading in the wrong direction. We saw Mount Gibson Iron go from buy to neutral. Orocobre came out with a quarterly production report. We'll talk a little bit more about that later, but we're seeing downgrades from Citigroup and Credit Suisse from buy to neutral and neutral to underperform respectively, but do note that those share price targets went up significantly. Zero Resources, that's the battery graphite producer, from outperform to neutral, but it did get a big pop-up in its target price from Credit Suisse. Woodside from buy to neutral, also increased price target there. And not so good, Western Areas. So Western Areas, another nickel miner, they saw quarterly nickel production of 3,500 tonnes, and that was well down from 5,800 tonnes a year ago. And they also forecast their full year production to be at the lower end of its most recent earnings guidance range, and costs to be at the higher end. So production down, costs up. Not great news from Western Areas. We saw Citigroup downgrade buy to neutral, and Macquarie from outperform to neutral. And we also saw price targets coming down to 65 to 260 and 330 to 270 respectively, but some upside there in the targets. Okay, have a look at the price target increases. So this is where the ratings were kept on hold, but the price target at the broker was changed. Looking for some themes in there. Well, Beach Energy, they had quarterly production report out during the week. Wasn't too bad, a bit flat, and I guess we're getting some small price target increases for them from Credit Suisse, Citigroup and Macquarie. Other than that, a couple of banks in there, so we'd see Bendigo and Adelaide, Bank of Queensland, Commonwealth Bank, featuring ANZ. They're getting some price target increases as well. We did obviously talk about corporate travel management. There's another price target increase for them. Heading into the next page, and again, feel free to press pause whenever you like and have a closer look to see if your stock is on the list. JB Hi-Fi getting a little pop there. Some nice increases from IGO, from Citigroup, so they found some positives in that one. Aluka about 19%. Galaxy Resources quite positive here. Citigroup and UBS 20% and 26.9% respectively, and still some upside to be seen on that. UBS is still at a buy on that one. Nickel Mines, we'll talk about this a little bit later on, but getting a couple of price target increases. Orocobre, we mentioned that one. Oil Search, they also had their quarterly production results out. Record production, but their outlook wasn't as positive, still managing to get some price target increases from the brokers, but we can see for the most part the stock is fairly valued as far as the broker is concerned, and we've got a couple of underperforms and a neutral on that one, so I wouldn't get too excited. Heading into the next page, Reliance Worldwide, they came out with some half-yearly numbers, so they were better than expected. This is the plumbing supplies company. They're saying that half-year net sales were up about 13%, and their EBITDA is expected to grow by about at least 30% from last year, and they were on target to meet their cost savings that they had flagged earlier on. So brokers are quite positive to that one. And heading down the list, another bank there, Westpac, getting a price target increase, and we've seen quite a few of those come through recently. And the technology company Accounting Services, Xero, getting a nice pop up there, 20%. And Pilbara Minerals, just looking for the big moves here. Pilbara Minerals at Citigroup up about 42%, but pretty close to its valuation. Okay, price target decreases, not so lucky. Fortescue came out with their quarterly production as well, a little bit down on what the market was expecting. So we saw some price target decreases in here, not huge ones for Fortescue. Macquarie actually going a couple of times during the week, UBS won, and still a bit of upside seen there by Macquarie. Newcrest Mining, they had a pretty nasty production report as well from them, also citing they're struggling with the rise in the Australian dollar. They said that their output was down from 551,000 ounces to 535 for the second quarter. They said that they were struggling at Cardia. Lihir mine in Papua New Guinea was doing well. They did maintain their output guidance, however. Heading into the final page, we can see a drop there, quite a large drop for Sydney Airports at Macquarie Group. Have a look at a couple of the stocks of interest from the week. Nickel Mines is the first one we'll focus on, and they came out with a strong quarterly production report, which was well received by the brokers. So Citigroup retained their buy rating, their 140 price target. They noted that the EBITDA, so earnings before interest, tax, depreciation and amortisation for the company was 10% ahead of their expectations on the back of stronger prices and record production. They were impressed also with cost reduction. So compare and contrast that, for example, to Western areas where production was down and costs were up. You can see why they liked this one. Credit Suisse raised their target from 135 to 150, so a nice pop up there, retained their buy rating. They were very positive with the quarterly production reports. Production was a record and 15% of expectations. Prices also improved and contributed to a very impressive operating profit result. They expect that profit or strong conditions to continue and therefore remain upbeat on the company's prospects going forward. Macquarie raised their price target from 140 to 150, retained their buy rating also, and so that gives us 3 out of 3 buys on the screen. They believe that strong nickel prices will continue to drive strong financial performance for the company. Production shipments were better than expected, and production could double once they complete this increase of the Angel operation ownership. Looking at what the brokers are saying overall, we've got 3 on screen, but in total we've got 4 strong buys, 3 buys and 1 hold. In terms of the mean estimates, we're looking at about an average of 149, given the share price is sort of mid-120s. That gives us quite a bit of upside from here, with a high of 170 and a low of 126 would indicate fairly limited downside. In terms of the fundamentals, that enterprise value to revenue is a very, very strong one. I would suggest that would put it probably in the top 20 to 25% of companies on the ASX. Price to earnings ratio, I don't think is a stretch for a company showing this sort of growth, and you can see that it comes down to below 15 based upon that very strong growth rate as evidenced in the very low PEG. So we typically want to see a value less than 1 there, and it certainly is, and you're getting pretty reasonable dividend yields while you're holding the stock. Return on equity looks pretty solid there and increasing. We've certainly featured this one many times in Think Technical, so we started covering it around about September at 71 cents. So at the recent high of 142, you are doubling your money. And in terms of the technical analysis, happy to hold on the basis of this very, very strong short-term uptrend, long-term uptrend, higher peaks, higher troughs still intact. Yes, it's had a little bit of a pullback, but this is a pretty key support zone here, so I'd be watching for any positive price action back up to the upside, and would continue to hold if I had it, but happy to buy or add to a position if I didn't. The next one we're going to look at is Orocobre Resources, and as I said, this one had a production update, quite positive, and we'll have a look at what the brokers had to say. Whilst the update was positive, the share price has had a pretty strong rally, and I think that was the theme behind some of these broker moves. So Citigroup did downgrade their rating from buy to neutral, but raised the price target, and a big jump there from 5 to 6.75. They were pleased with the second quarter production report. It was ahead of their expectations, both in terms of sales and production, and they saw some improvement in prices. Of course, lithium prices have been quite depressed of late, so a little bit of a pickup there, and therefore they're going to upgrade their earnings expectations for FY21, and their rating downgrade was due to recent share price appreciation rather than, not liking the stock. Credit Suisse downgraded also from neutral to underperform. They did raise their price target, however, substantially from $2.85 to $5. They said that the recent share price appreciation increased the risk, and therefore they downgraded accordingly. But longer term, the growth profile remained attractive as the tailwinds for the industry improve, and EV sales tend to increase as well, and that should have a positive impact on lithium prices. Morgan Stanley, they retained an equal weight rating and their 335 price target. They said it was a solid quarterly update, but there are still nagging concerns about pricing not in the clear there. They did see improved operating conditions into 2021 to support operating margins, and they said that Orocobre is their preferred pick in the lithium sector, so that's pretty impressive. UBS raised their price target from $4.90 to $6.50, a good bump up there, retained their buy rating. They said that the results were better than expected and were pleased with the progress on production, sales and costs. You would say, however, that brokers in general are sitting on the fence on this one. We've got 2 strong buys, 2 buys, 4 holds, 2 sells, no strong sells, and an average recommendation of a hold. The mean target is 411, and that is down here. So that would indicate, again, that those recent share price gains are probably putting it ahead of some of the brokers' price targets. But there is a high estimate of 647, which is kind of in that area there. In terms of the fundamentals, well, that enterprise value to revenue is not terrible, but not fantastic. We don't have a PE or a PEG, I'm guessing, because in the last financial year we may well have delivered a loss on this one. In fact, I don't suspect it, I expect it. Price to book value, return on equity, they're not shooting the lights out on that one. So again, there's an issue with the valuation, despite the company fundamentals looking quite prospective. We have featured this actually in Think Technical. I did go look it up, 9th of December at 414. So in at this breakout level, which would have done pretty well if you were able to realise higher prices there around $6. Otherwise, it's still ahead. We're holding around $5, and we're just going to see how it reacts in this dynamic support zone here. That's the light green zone. Short-term trend is still up, long-term trend is still up, and I think it's worth a hold at this stage. I don't think I'd be buying until I saw some positive price momentum coming back into the stock. However, okay, well that's it for me today. There've of course plenty of updates you can catch on our website. There's the link there to the market news section. You can follow me or the Think Markets handles on Twitter. I'll be back on Monday with our weekly Think Tax. That's our weekly wrap of the week that was and look to the week ahead. On Wednesday, bring your portfolio along to our Ask the Experts. And it's a webinar, so you do need to register for that one. Go to the webinar section of the website, and I'll happily have a look at any stocks in your portfolio and give you a quick fundamental and technical on those. And then Wednesday week we'll have 3 small cap stocks to watch in 2021. The disclaimer before I leave you today says that everything we've discussed is general in nature. Don't forget we are a regulated Australian broker, so before you act upon any of this general advice, read this carefully, give us a call or consult the website for further details. It has been a pleasure being with you today and all this week. I'll catch you on Monday. All the best for your trading. Until then, bye-bye for now.